DeFi gems will take over 2021, and where 10x returns in the traditional financial world are a very big deal, in the crypto world, they're common. Welcome aboard the Bitcoin Express. My name is Chase. Let's get to it. I want to talk to you about DeFi gems that are not obvious picks, but obvious at the same time. What do I mean by that? If we look in the top 10, these coins aren't sitting there right in front of our eyes. We can make the exception that Chainlink is a DeFi token. It's listed as a DeFi token by CoinMarketCap, but I want to talk to you about coins that are not in the top 10. But at the same time, they are obvious. And the reason is because we don't have to do any detective work ourselves in finding these coins. All the data, all the information is right in front of our eyes. Let me explain. If we look at the top 10 cryptocurrencies, what are the obvious picks? Bitcoin and Ethereum. Did you ever stop to think and ask yourself, what is Ethereum? Most people will look at Ethereum as a whole complete bike. The wheels, the handlebars, the brakes, the pedals, and everything. But this is not Ethereum. Ethereum is maybe just the wheels of the bike, possibly even just one of the wheels of the bike. Because Ethereum is an ecosystem that has many applications built on top of it. And this is what gives Ethereum value. I want to show you a picture so you can visualize it. We see Ethereum is the base layer. And all these applications built on top of Ethereum is what makes it valuable. We have lending and borrowing protocols. We have decentralized exchanges. We have numerous applications. So Ethereum's success relies on the applications built on top of it. When you invest in Ethereum, you're investing in these applications. And when you're investing in these applications, you're investing in Ethereum. So at this point, if we know Ethereum has value, or at least people around the world think it does, the Winklevoss twins are talking about Ethereum, institutions, developers, they're all talking about Ethereum. All we need to do is find the valuable applications built on Ethereum, and it's easy, case closed. And like I said, we don't have to do any of the detective work. We can go over to DeFiPulse.com and we automatically find out, or we have known this for quite some time, that DeFi, decentralized finance, is a major part of Ethereum's success so far. And there is a lot of money locked up into DeFi. There's $23 billion locked into DeFi. And again, we don't have to do any of the detective work because these websites do it for us. We just go ahead and we find these DeFi gems sitting right in front of our faces. Maker, Aave, Compound. These are lending protocols. Maker is used to create the DAI stablecoin. Aave and Compound are lending and borrowing protocols. We have decentralized exchanges, Uniswap, SushiSwap, Curve Finance, derivatives, Synthetix, Nexus Mutual. These are the obvious DeFi blue chips. Again, I want to repeat these again. Maker, Aave, Compound, Uniswap, SushiSwap, Curve Finance, and Synthetix. And when is the best time to get involved in these altcoins? That is, if you believe in them in the long run. And the answer was yesterday. But of course, we can't go back in time. So moving forward, how would we go about this? Well, I can't tell you how you would go about it because we're all in our own unique situations, but I'll tell you how I would go about it. As I look at the crypto markets, I'm not sure exactly where we are. We are clearly in a bull run. We see coins going up 100%, 50, 60% just over the last week. But are we really at alt season yet? Have we seen these coins go 50, 100x, even the 1000x for some of these low caps? We haven't seen it yet, so we know we're not really at true alt season form yet. But these coins I told you about that are obvious, at the same time are not so obvious because they're not even in the top 10. We see they are moving up quickly. Aave is now sitting at 17 on CoinGecko, Synthetix at 18, Uniswap at 25. But moving forward, we want to go ahead and buy these coins, or at least I want to buy. So I have been in these projects for a while now. I have been accumulating Aave, and if you've been watching my videos, you'll remember that I keep speaking about Aave. So I've been taking my time. I dollar cost average. I'm not in a rush anymore. Aave's sitting now at $195, up 27% today. And I keep accumulating small amounts. But if I was starting over today and I didn't have any position in these coins, and I understood that we're maybe near a time where alt season is about to pop off, I would have to think about how would I go ahead and invest in this. I like to dollar cost average, but in this case, I don't know when it's going to just take off and skyrocket. But I need to be careful because just as it went up 27% today, It can also go down 27% in the same day or the next day. So I still would dollar cost average. And in this case, again, I'm using myself as an example. Let's say I wanted to put $5,000 into a cryptocurrency or into Aave. I would not put it in all at once. I would dollar cost average and I would break it down. What I would do is I would say to myself, maybe I'll just put in $500 a day of the 5,000. But then at the same time, I'm going to ask, well, what if the market takes off and I miss out on these gains? You know what? I'll do 1,000. And then I'd probably come to a conclusion and take the average and maybe set a dollar cost average buy daily for $700 or $750. And these coins, another benefit is that they are now available on all the major exchanges. We see Aave on Binance, Coinbase Pro, Crypto.com, same thing for Synthetix. It's on all these major exchanges. Synthetix now sitting at $16. And I'm excited for when you're watching this, whether it's tomorrow, next week, in a month, or a month from when I made this, to see what these prices are. Are they much higher? Are they much lower? So comment in the description below what the price of these tokens are as you're watching this video. So they're very accessible. All of these tokens, Uniswap as well, Maker, very accessible, dollar cost average. And the mistake that many people make dollar cost averaging is they keep to their daily routine or weekly, monthly, whatever it is. And then when the price goes down, they stop buying. And when the price goes up, they buy even more. This is the complete opposite of what is supposed to be done. Dollar cost average is supposed to remain for the whole time period. And this is assuming you're buying a project that you believe in. So I believe in Aave. So when Aave dips, as it already has while I've been buying it, I've been continuing to buy it. So in my case, what I do is as I dollar cost average and the price keeps going up, I continue at the same rate. But I'm pretty elastic with my DCA approach. And as the price decreases, and there are those dips. Remember that week, a week or two ago, when Bitcoin went down 30%, I increased my DCA and I bought even more at the time. But I will never, ever DCA myself using an exchange that has high fees. This includes Coinbase and Gemini. The fees are just too high. At least you can use Coinbase Pro, which has much cheaper fees. So dollar cost averaging really only makes sense. Again, it doesn't mean you're putting in $1 a day or $15 a day. Everyone can make it themselves. They can adjust it. It could be weekly, monthly, every 3 days. It could be $500 a day, $20 a day. But whatever it is, you want to keep the fees low. So again, Coinbase Pro, Binance, very cheap fees. Voyager app, zero commission trading. Kraken, very cheap fees. And make sure that as you enter these markets that are likely to get very crazy soon. Ethereum is still not at its all-time high of 1,400. And when it hits 1,400, I don't really even know what to expect. Just make sure you take control of your emotions, because these markets can make a person go crazy and emotions take over logic. And you don't want to be that person. I hope you enjoyed this video. Like this video, subscribe to the channel. Thank you for listening, and I'll see you next time.